In this episode, we are the ones being interviewed, and this time by Astaneh. Ethan is a wealth advisor who works with Nicola Wealth, a firm dedicated to serving high net worth families. Nicola Wealth manages over $13 billion in assets, and they operate with over 400 staff and have 6 offices in both British Columbia and Ontario. And they advise institutions and high net worth families of all professions and backgrounds. In this interview, we provide Ethan with an overview of the current marketplace and then explore the behavioral shifts and dynamics that we've seen take place from earlier just this year. We discuss the policies that were put in place to create the current housing crisis, the affordability issues, and of course, where the opportunities are in 2023. Ethan asks a lot of great questions, and we thank him and Nicola Wealth for this opportunity. Enjoy the interview.
Hi, Dan. Hi, Ryan. Thanks for joining us today.
Hey, thank you.
Thanks
We're happy to be here.
Yeah, right on. So maybe before we jump into the discussion, can you tell us a little bit about the Vancouver life and your area of specialization? Also, how you ended up in the business.
Of course. Well, interestingly, Ryan and I, both got licensed within just a couple months of each other.
Oh, yeah.
And serendipitously, we joined the same brokerage. And this is before knowing each other whatsoever. And of course, at our brokerage, which at the time was called Oakland Realty, they do basically kind of a training for newer agents. And so we were in this training together. And right out of the gate, we kind of saw some similarities in each other, sort of like work ethic, morals, this type of thing. And so we kind of started working together, becoming closer friends, this type of thing. A year and a half, 2 years goes down, and we're sharing wins, talking to each other more than most other agents. We had created a mastermind group together and really just started building our businesses, which were independent at the time, but together, and really kind of helping talk each other through, because as many may know, as a licensed agent, you don't have much training in the real world of that business. So we are like, okay, well, let's learn it together because it's more fun that way.
Right.
And so we became successful solo independent agents, which was great, but also found out that real estate can be rather lonely as a solo agent, really. And we were just having way more fun, like I said, sharing wins, but also solving problems. Hey, have you come across this? Oh, you did. What did you do? How did you find the solution to that? And that basically grew into like, well, why don't we try doing a couple deals together? Because again, we know we're successful solo, but I think it might be more fun as in a partnership. And so we tried a couple, very methodically is how we approached this. And that was better than it was solo. Mm-hmm. So essentially we decided like, look, this is definitely the path. This is the route. We identified that real estate too, the way it's trending is you can service your clients so much better as a team, right? A solo agent, you have one piece of finite time. And when in a partnership and in a team, you can service that client so much more profoundly and efficiently that we figured that was unquestionably the future. Yeah. So we decided to partner up, get our assistant, and then build that team. And so that's how the Vancouver life came to be and how our friendship has grown from.
Yeah, also, I think if you're a newer agent or you're getting into the business, you need an accountability partner. You need somebody to hold you accountable to the things you want to achieve, not just necessarily talk about it, right? So whenever we would meet, we would not only talk about our wins and our losses, but, Dan would say, hey, you plan to do, knock on 40 doors this week. Did you do that, right? And if I was like, well, no, then he would be like, well, why? Right? And so that was really good to help cover each other and ensure that we were doing the things necessary to grow business, right? And then with respect to the Vancouver life, that was something that was born out of our time together. We branded that company. We've been growing it ever since. In the last sort of 17, 18 months here, we joined eXp Realty as well, cloud-based digital brokerage, really sort of the technology suite of the future for how real estate's going to be done in our mind. And that's kind of where we are today.
Very cool. And we're familiar with that here at Nicola Wealth. We take a similar team-based approach, and internally we say many hands make light work, but they also deliver great service.
They do.
Right. Yeah.
They do. Yeah.
Great. So maybe jumping into real estate. First, maybe we can define for our listeners what residential real estate is. Can you break it down into its market segments for us, and perhaps give us a sense of how each segment has performed so far this year?
Yeah, absolutely. So essentially the way that real estate's broken up here is in 3 different asset classes. You're going to have your condo, your apartment essentially, and then you have townhouse, and then you have detached. So I think everyone's probably familiar with what each of those kind of looks like. And to start off, I think I'll jump into what the condo market has done this year. Obviously an interesting one, because condos largely, especially here in Greater Vancouver, they're going to be an asset class that's going to be attractive to investors and first-time homebuyers. So understandably, not only is there more of them that exist, but obviously they then transact the most. So there's kind of the most fluid asset within the marketplace. And if we look at what happened this year, let's look at 2022 so far, and we're recording this on December the 1st for our listeners that need reference. So condos started the year at $728,000 when we're talking about price. This was the tail end, of course, of the pandemic and all the QE and all the money that was flooded into the marketplace, which saw every property type just basically balloon in price. Condos peaked in May of this year at $780,000. So they saw an additional $52-ish thousand in just that short time frame. Since they peaked, or since they've come off now, we're sitting at about $727,000. So we've essentially seen the exact increase be washed out so far. So we're almost verbatim from where we were at the beginning of the year. But if you pull back just a little bit, if we could go back to, let's say, January of 2021, we're still up about 14% in that property type. And when I talk to you about them being so attractive in the investor space, during 2021 and up to the beginning of 2022, 25% of all new mortgages were for investment properties. 1 in 4 purchases during that time frame was for investors, right? People were feeling very cash rich, and they were looking to leverage their properties into more properties. And of course, condo, based on price point, was the vast majority of where that went. So of course, you saw a lot of investors pricing out a lot of first-time home buyers, especially here in Vancouver. And of course, Toronto did something quite similar. Now, if we're going to shift over a little bit here towards inventory, I've been repeating this for a few months on our podcast, but inventory is the story. And it's literally the same across all 3 asset classes, which we'll get into. And it's amazing how differently the inventory has acted here in GVRD compared to the rest of Canada. And so realistically here, condo-wise, we saw, the peak of inventory, meaning the bottom of the inventory being the lowest, around December of last year. And that number, that amount of inventory available was very relatable to what we saw in 2016, 2017. So inventory levels were at an equally low amount to the last bull run that we saw. So no doubt, of course, that there's been a huge increase in price when we were seeing similar numbers, right? Demand versus supply, simple economics here. Now, sorry. Okay. Now, pulling back even further, let's look at the 10-year average, because you want to have that macro look. And of course, we are still sitting well below the 10-year average, understandably. And we've seen a big amount of swings in those 10 years, as you can imagine, but we're below the 10-year average right now. Looking back, let's say 10 years ago to the day, the October numbers, there was 78% more inventory in the condo market than there is today.
What a stat.
That's big. And you got to think as well, there's been an additional 300,000 people that have moved into the GVRD since then as well. So you can see the population eating up the existing supply.
That's incredible.
It's a big number. Obviously, the condo market was the first that people thought would be kind of flooded once these interest rate hikes started going up. And we just have not seen that. Again, we're well below 10-year averages here and well below where we were just 10 years ago. This can change, though. This is the asset class that I think will change the most based on 2 things. 1, it's being developed the most, and 2, we've obviously just seen the strata rules change.
Right.
So all of these properties that people were holding that either could have no rentals or had very restricted rentals, those are now accessible to a much bigger buyer pool. A lot of people saw their unrentable condos go up 5-6% in value probably overnight with that strata change. So that, looking forward, I definitely expect to see a lot more movement within the condo asset class.
We touch on detached. Bit of a different story here. And I kind of want to, just to give some context, because if you look at the data for detached homes, it looks crazy, right? Especially in the last 2.5 years. It really stemmed out of the lockdown, right? We started to see single family homes gain a sense of utility that wasn't there before, right? And so you got to remember, if you go back to the lockdown, it's some time now, but when the lockdown happened, everyone thought that if you were in close proximity with someone, you were going to get COVID. And they weren't wrong, right? So there was a huge push to get out of attached living. There was also a huge push to get out of the office, out of gyms, out of all of that. But where did people go? They all put that in their house, right? So the utility of single-family homes grew tremendously in the pandemic. I would say, it ballooned in the pandemic, more so than it was really worth. And then, we go to March 2020 and April 2020, the Bank of Canada, dropped rates, poured fuel all over the fire, right? And now all of a sudden you had people that were dumping their condos downtown and moving to a suburban home out in Port Moody, right? Because they figured, well, my office is now shut down, I'm not going back to work, right? And some of that coming back to work has changed, right? There's still hybrid models and things like that exist. But generally speaking, there was a huge push because of the utility that a home could provide. So, we fast forward to where we are today, and single-family homes went from a crazy price point in January 2021. The HPI price for single-family home was $1.62 million. Wow. Right? That rose to the peak, during the peak here in 2022, to $2.1 million. So it went up $500,000 in roughly 14, 15 months, right? So you're looking at $35,000 a month just in your home.
That's incredible.
Right? Then March came around and the Bank of Canada said you're having too much fun. So now it's time to rein this in, right? And we got hit and hit and hit and hit. As such, the single-family home market has now corrected by about $300,000. We're sitting now down around $1.8 million, right? So it's really kind of come down. And specifically in the last 3 months, we've been in a buyer's market for single-family homes, which is not something that particular market spends a whole lot of time in. In fact, it's only sort of been 3 months that it's been in there, and in the last month we've ticked out of that into a balanced market again. There's some obvious reasons for this, but primarily when you look at how the city is developing, they're only attributing 6% of brand new projects to single-family homes. So it's a dying asset class, right? Or better to put, probably dying is not the right word. It's not growing, right? So it's becoming more and more difficult to get, which means if you own one in the long run, certainly not in the short term here, short-term price fluctuations are going to happen more in the single-family market because there's less buyers at that $2 million mark.
Right.
But as we go way long, they're not making any more of them. So when people actually do buy them, they hold on to them for a very long time, right? And I just want to give a little piece of perspective here. So the reason that homes haven't had sort of any panic selling is, like Dan touched on, our inventory crisis, right? For perspective, in 2008, the global financial crisis, we had 8,900 single-family homes for sale at the height of the global financial crisis. Okay. Today, with a similar sentiment in the marketplace, people feeling very similar about their own finances, we have 4,300 homes for sale.
Ooh, interesting.
Right? So why is that? Huge immigration numbers. We've got a very healthy job market despite the fact. Geographical constraints, which a lot of people don't touch on enough in Vancouver, right? When you compare it to something like Toronto, which is a sprawling city, we just don't have that here, right? And then there's also equity that's been made in the last 20, 30 years that's unprecedented. So money moving within families is a big piece of that.
Very nicely said. And then to wrap up the asset classes, the last one, of course, is townhomes, which I can kind of sum up quite quickly here. It was basically the most sought after asset class during the pandemic. And again, it's largely because of affordability. People wanted detached, but that $2 million price point was unattainable for many. But a townhome or a half duplex type thing feels like a home. You know, you get the extra square footage, you get the extra bedrooms, you get a little piece of land. And so the demand there was immense. And we saw it really skyrocket. Like, for example, I just talked about, looking quickly back to January, of 2021, where condos did 14%, townhomes are still up 26%.
Wow.
So almost double. But very similarly, they acted a lot like what condos did this year in 2022, where they started about $1,050,000. They shot up $100,000 and they've lost that $100,000. So they're almost verbatim where they were at the beginning of this year. Sales volume just above that 10-year average, and for reference, there's about 3,800 that have sold here in GVRD year to date. Though, understandably, that inventory crisis that we keep going to touch on during this interview, it's been declining for about 3 years straight in that type of property. And I do definitely expect this to continue. For example, again, let's look back 10 years. There was 103% more townhomes available than there are today.
Oh, wow.
Active listings with, again, an additional 300,000 people looking for homes.
By the way, I only laugh at the absurdity of it.
Well,
right?
yeah, I hope the policymaker is listening, actually.
Well, it's interesting. I tend to believe that a lot of policy, we'll get into that, but I tend to believe a lot of policy it's too far gone for a lot of policy to fix this now.
Right.
But we'll get into that.
Yeah, sounds good. So maybe we can touch on next, and you did a little bit, but expand perhaps a bit more on the behavioral aspect of buyers and sellers. How would you describe the behavior today, and how does that compare to the past?
Much like all the asset classes, you cannot paint buyers and sellers with a homogeneous brush, right? There's buyers at the $500,000 level. There's buyers at the $5 million level. So buyers who have, to answer your question, it's largely based on your wealth position, right?
Okay.
So clients with a higher net worth position, the ones that we're dealing with anyhow, we've encouraged them to move into a cash position, some of it into a cash position, where they can pick up deals as they become available. However, a lot of those buyers who are looking to pick up distressed properties aren't finding them, right? Inventory crisis, like we talked about, but also because if you consider the fact that if you bought a house 2 years ago or a year and a half ago and you got it for 1.5%, why would I dump my property now to qualify at 5.5%, 6% to get the same home? I might not even be able to afford that, right? So, the media has this way of painting the market and saying, oh, the market's pretty crappy. And you'll hear articles from Toronto, and buyers will put that in their mindset when they move into the market in Vancouver. And it's just not the case, right? And so, we've seen big swings in price across the nation, but we haven't seen it here. And that is kind of ruining the expectations of buyers. They're
Right.
realizing that sellers aren't going to back off their numbers, right? They don't have to. And the more and more immigration that we get, the more and more interprovincial migration that we get in here, it's going to make it more and more difficult for those deals to appear, right? So a 6% deal or a 10% deal is a whole lot better than being in an 8-way multiple offer in 8-9 months from now.
Yeah, it's quite fascinating to see that it was literally just 10 short months ago that people were lining up to overbid by $100,000, $200,000 sometimes, competing against 10, 12 other people and begging for a market where they could just go in and see a home and be able to use subjects and have some type of reasonable environment. And now that we do, everyone's backed off. No, not interested.
Yeah.
You can see this house. It's been on the market for 2 months. You can buy it, you can have subjects, you can have conditions, and you can buy it under ask. Nope, I don't want it. You can negotiate,
Yeah.
exactly. So it's quite fascinating. Real estate, especially if it's your home that you're looking to buy or sell, is understandably a very emotional decision. And people's mentalities, especially here, for lack of a better term, there's a big herd mentality that comes with real estate. When everybody wants it, everybody wants it. When everybody doesn't, they also don't. They back off. And it's a little bit of a Warren Buffett situation, realistically, is how we kind of talk to a lot of our clients. Like, look, everyone's moving away. This is a great opportunity to move in and do the opposite.
Yeah.
Obviously, independent, case for each person. But people are very susceptible to the news headlines still. I'm quite fascinated by how powerful the media still is. People will look at the news, and right now it's obviously all negative. So they think that's the way it's going to be for the foreseeable future.
Yeah.
And so they'll just be on the sidelines. And kind of like what Ryan touched on too, because the market moved so fast based on the interest rate hikes increasing the fastest in history, there's a lot of shock in the space right now, meaning that sellers, they still want the February numbers here in December, and those don't exist.
Yeah.
And buyers are like, well, this is going to drop out forever, so I want 2024 numbers. And so they don't see eye to eye by probably the biggest gap we've seen. And so what's happening is both parties are on the sidelines, and they're just kind of doing nothing, in a sense, you know. And if we look to like just yesterday, Jerome Powell from the Fed in the States there basically said the rate hikes are about to end. And people loved hearing that. Of course, positive headline, and it just shot the stock market way up north. And of course, anything that was real estate related
went with it
and saw the biggest increase. So real estate, you know, people are on the sidelines, they're waiting, they're ready for it, but they need the media to tell them to go.
Yeah.
So it will happen, but again, that's kind of the behaviors we're seeing right now. Very, very interesting dynamic.
Yeah.
That's a great breakdown. You talked a little bit about a buyer's market and a seller's market. How do you know technically when you're in one, and what are we currently in?
Yeah, great question. So the real estate board does sort of have an algorithm, a simple mathematical equation of what that looks like. And it's simply done by dividing the amount of sales in a given month by the amount of active listings in that same month. If there was 1,000 homes sold and 10,000 units available, you're looking at a 10% ratio. And of course, the way that they break it down is a buyer's market, it needs to be basically between 0 and 12%.
Okay.
If it's between 12 and 20%, that's called balanced. That's a civilized market. And then 20% and higher is, of course, a seller's market. And seller's market can go over 100, if you can believe it. For reference, at the height of the pandemic, the ratio was 58%.
And that's for all asset classes.
Yeah, this is bundling
right?
everything together for all of GVRD.
Yeah. You go to some places like in the height of the market, like in Abbotsford, for example, you were seeing like 116%.
That's incredible.
Yeah. So where are we today? Today, again, it's one brush, but yeah, 19%. So we are at the high end of a balanced market. And for reference, I know people sometimes think, oh, I'm going to time the market. I'm going to buy it at the bottom. Very tricky with real estate for sure. And again, being a real estate investor, it's always the advice of time in the market, not timing the market. It's an adage that we've probably all heard, but one that stands true today. Mm-hmm. And part of the reason I say that too is if you look back, 17 years of data that we have when it comes to this ratio of which market we're in, it's only been a buyer's market for 21 months of the last 17 years.
Interesting.
That's 10% of the time over the last 17 years that it's been in a buyer's market. It's almost a unicorn in GVRD. Yeah. So trying to wait for that is not really the way to.
Well, you need a pandemic.
The strategy.
Yeah, you do.
So again, too, when it talks about timing, I mean, worst case scenario. I look back over the last 45 years of real estate data here in GVRD. Worst case, if you were to buy a home at the absolute peak of a cycle, at the highest price point possible, worst case scenario, you would only have to wait 8 years for that to have hit cycle bottom and come back up to equal the price where you bought. Mm-hmm. And that's worst case. A lot of these cycles are between 9 and 15 months kind of thing. So it's again, a good reference of like, oh no, what happens if prices go down tomorrow? Well, who cares?
Live in your house.
In the sense of, enjoy your home. We always advise our clients to look at your property with at least a 5 to 7 year time horizon. Yeah. And if you do hold on to it that long, chances are very high that you're going to come out above. And also you've been paying down your principal during that whole period as well.
So just breaking down here in terms of asset class, did you want to touch on your last point there? It's an interesting point.
Sure, yeah, okay, gotcha. For example, when we're talking about the time in the market, the year 2000, it doesn't feel that far away. I mean, it was 22 years ago, but it feels, kind of like last month. Either way, I'm bringing it up because in the year 2000, a detached home, just take a guess. What do you think a detached home cost just 22 years ago in GVRD?
I'm going to say $600,000.
Yeah. 400.
Oh, wow.
I know, right? It doesn't feel that long ago. The millennium, right? We all remember bringing in the new year in 2000. Anyway, so it was 400,000. 22 years later, it's 1.8. This is a 450% increase.
Yeah.
It's similar kind of returns to what you guys are doing here. Nicola Wealth, I hear. But again, we're talking about 20% annualized. And so trying to time the market or just get in and hold. And enjoy that, historically, 20% annualized return.
Yeah, and then just to break down simply by asset class where things are sitting right now. So apartments, I feel up until David Eby released this new restriction lift, it definitely had sort of, it was the class that fluctuated the least in terms, and that's because it had the most amount of product in the most amount of markets at the most affordable levels, right? So with that being said, there's always constant movement in it, but it doesn't, you're not going to see it jump like crazy, right? Like it did in the single family market where there's only pockets of them, right? So condos are now sitting in a seller's market at around 23%, right? So, and that's not always the case. You're going to find some condos that no one's made a phone call on, right? They're out there. Townhomes, a lot less of this product, still sitting at 23%.
Both in sellers markets.
Both in sellers markets, right? Single family is sitting at 14%. Right? So it's just entered the balanced side of things. Now, typically we look for these trends to be, 23% or 20, 21, 22, 23 for a sustained period of 3 months, right? That's how you can really qualify this as a buyer's market or a seller's market, right? We just went through 3 months of a buyer's market in the single family realm, only to now have just left that. So if you were hoping to get into that marketplace, you still have a chance, but it's starting to climb out of it.
Right.
It hasn't been a buyer's market overall for 4 years, and when it was, it lasted 2 months.
Yeah.
Didn't even hit the trend level.
Yeah, exactly.
So.
Yeah, and so it makes me think of when you're dealing with long-term investments where time in the market matters. I mean, the best timing was always yesterday. Right?
No one's ever mad about real estate they bought 5 years ago.
That's right. Can we pivot a little bit and talk about, in Canada, the two key areas for housing, Vancouver and Toronto? And can you talk a little bit about the dynamics of real estate in each market and how they're similar, but also how they're different?
Yeah, obviously our focus is in Vancouver here, but with that said, we do look at the stats in Toronto as well, because it's very, like you said, it's the two major markets, right? I think the biggest difference between both cities outside of their size is the fact that Toronto construction times take way less, right? So the ability to create infrastructure in Toronto, like for example in Vancouver, if you're going to build a tower, from the time you purchase the land to the time you get approvals to the time you're now living in said building is 4 to 6 years.
Wow.
It's a long time, right? And a lot of those costs get passed on to the people who are buying them, right? Whereas a tower in Toronto can take 1 to 2 years, right?
Interesting.
So the ability to create inventory is much faster in Toronto, and that's also a product of its geography. Because it's a sprawling city, it can fire up towers a lot quicker. We don't have that here. We can't even go west. It's water.
Right.
You go north, you've got mountains. South, you've got the border. ALR is completely locked up, right? So you're not getting any agricultural land reserve that's going to be converted or rezoned for density, because any government doing that is going to lose their position. So they won't even touch agricultural land reserve. And that's part of living on the West Coast, right? So when you look at not only just the geographical constraints, but the time it takes to construct, and you add those two things together, Vancouver is, in my opinion, much less of a financial center and much more of a destination. So people, when they move to Vancouver, they come here to stay.
Right.
When people move to Toronto, they're typically there for a job. They've got an opportunity. They're in there for 3 to 5 years. They're going to make some money, and then they're going to move on. Maybe that's moving out to the burbs after that, or maybe that's another province, right? So when you look at the two cities, they're completely different in not only the type of real estate, how long it takes to build, but also the industries that are inside of them and why people buy real estate there.
Yeah, interestingly, Toronto used to operate in the housing market almost 3 to 6 months ahead of what Vancouver would do. So we almost used to have like this crystal ball of the future there. Hey, what's happening in Toronto? Expect that here in 3 to 6 months. And somehow the pandemic almost made it an equalizer in the sense that the two markets started acting very similarly. And so from, let's say, the lockdown to the peak earlier this year, both markets increased 35 odd 40%, very similar and at a very similar pace. But since things have peaked and are now on the downtrend, we're seeing median prices. If you want to pull up that one data point, median prices in Vancouver are down 8%. In Toronto, 25.
Oh, wow.
They're getting absolutely hammered now in comparison. So again, it's showing Vancouver's resilience, but it's showing that the two have now somewhat detached from one another, again, as far as what's happening in the marketplace. And I also believe that's partially due to Toronto being a bit more speculative. I think there's a lot more, obviously based on the volume, and a lot more, I think foreign capital has rushed into there too. A lot more condos, so there was a lot more speculation buying that happened there, making it more volatile.
Yeah, I think the only other thing that I would touch on that's different between the two is both the supply numbers, so there's a lot more inventory, which we touched on, but immigration, a lot of people are coming to Vancouver.
Right.
A lot are coming, they go to Montreal, typically, Toronto, and Vancouver. And then we've got interprovincial migration on top of that. So when you look at those numbers and you look at, okay, well, if roughly an equal amount of people ended up in Toronto that ended up in Vancouver, and yet they have supply and we don't, then we're going to have a price basement that is going to be much lower than where Toronto could go as a result, right?
Right. That's fantastic. Thank you for that breakdown. And nice to know that maybe we're inheriting here from the West some people that are from Toronto. It's nice to see the flow of things come out West sometimes.
Yeah.
Maybe we can go back to the comment about policy and policymakers. In your view, what can be taken to make housing more affordable? Because it seems to me it's actually becoming more unaffordable.
Well, yeah, I mean, largely because of where rates have gone, right? I mean, you can't pour in billions of dollars into the economy, give out free money, and not expect asset prices to get uncontrollably out of whack.
Yeah.
Right? So maybe not dumping a whole ton of money into the economy would probably be a good place to start.
Good step.
Right? And also maybe having some finite decisions about where that money goes, right? As opposed to just handing it out. There needs to be some accountability there. But beyond that, this unaffordability thing has been in the making for 20, 30 years. So it's not something that we can just fix. Right? So there's no, in my opinion, there's no pen stroke short of destroying the economy, because we're so interconnected with our housing, with the economy. You're going to ruin the economy to make housing prices more affordable. And the other thing about affordability, everybody wants affordable housing until it's yours. Right? I make it's a bit of a joke, but it's true.
Yeah.
Right? Everyone wants to be able to buy a house, but when you sell yours, you want as much as you can get for it.
That's right.
So that's one side of it, but what typically brings down high prices? Higher prices, right? I mean, we've kind of experienced that. We've gone through that. Prices got so high that they got so unaffordable, now they're coming down. And I would argue that outside of interest rates, that was already starting to happen, right? The market is the market. It's going to react to when prices get so ballooned, people go, doesn't feel right? And you only have to look at 10-year projections to realize that it's getting out of whack, right? So in order to answer your question, it's probably not a favorable answer, because I don't think there's a lot of things policymakers can do now to help the situation. Instead of making things more affordable, we have to look to ways for people to earn more money, right? So it's the other side of the equation.
Interesting.
And I think that when you have decades of compounding price points here, like Dan said, in 2000 you could buy a house for $400,000. And if you thought that was expensive now, is it expensive now?
Right.
Or expensive then? It is now, right? But where are we going to be in 20 years is another question. I reflect on that question, and I looked at myself in my 20s, right? I couldn't afford a house or a condo at that time. I came out of school, I was broke, I was bartending.
Like most of us.
Yeah. So what did I do? I found out, there was a huge oil rush going on in Alberta. So I linked up with some people who were building subdivisions in Alberta. So I spent a lot of my 20s flying across Canada, going into different markets, saving the money I was making, making plans while other friends were partying. There was sacrifice. Policymakers need to get off this sort of instant gratification, quick fix, and we need to get back to learning that delayed gratification is what creates wealth.
That's really interesting. It's like almost a financial literacy exercise.
Yeah, it really is. I mean, I would love to have a policy that could just, hey, it's affordable for you. It's just not the case, right?
Yeah.
It was affordable 20 years ago.
And you can't flip a switch and just make 2 million homes. It doesn't work like that.
Or $2 million. So you need to figure out how you're going to do that. And that takes a sense of responsibility. So people need to stop looking to policymakers and start looking at yourself and what you're going to do to get ahead.
Yeah, that's great perspective. Okay, maybe we can talk, since we're sitting here in Vancouver, we can go local and talk a little bit about Whistler. It seems to have its own microclimate in terms of market dynamics. Can you give our listeners an update about what we're seeing there and maybe your expectations for the short term?
Yeah, absolutely. So I actually lived in Whistler from 1987 to 96. Okay. So I saw part of the growth that happened up there, and there's no question. Whistler is a very small town with a lot of global attention. Mm-hmm. It's a world-class resort. It has been for decades, and it's going to continue there. And they are very tight with their housing policies there. Like, as you can tell, there's very little development that happens in Whistler. I like I said, I grew up there starting in 87, and you drive up now and it doesn't look that different realistically. 10 years ago, there was 10,000 people who lived there permanently, and now it's only 14,000. Wow. So you've seen 4,000 people in 10 years for growth, and there's only 4,600 homes there total. And 60% owner occupied, 40% rental is about the breakdown there. But when it comes to prices, okay, so here's a pretty crazy stat. And again, we just talked about Vancouver and how much it went up. Well, in the last 9 years, the average home price in Whistler has gone up 265%.
Wow. Whoa.
Right? And we just said, so GVRD in the same time frame did 79%. So the rate of price increase in Whistler was 3 times that of Vancouver.
That's incredible.
Yeah.
So why is that? Well, again, it's a big supply and demand issue, right? When you only have 4,600 homes in an area that the world knows about, the big money is going to come in. And of course, keep in mind too, this is an area where the foreign buyer tax was exempt. It's your municipality. Mm-hmm. So if you're looking to place capital somewhere and you're coming in from wherever, and maybe you like to ski or golf or whatever, or just want a safe haven for your money, and you want it in Canada, but you don't want to go to Vancouver and pay a 20% premium, drive 90 minutes north and buy your $5 million home there, or whatever the case may be. Yep. So that's a big part of it. And while people may think that, it's got to be only foreign money up there, well, guess what? One of our team members is actually a Whistler agent who lives up there. And so she's very knowledgeable of that market. And she's very aware that over 90% of the homes sold there are sold to Canadians.
Okay.
And 90% of those are from BC. So understandably, a lot of local demand, but it's not like there's 40-50% of foreigners buying up Whistler right now.
Yeah.
There is a lot of wealth in Canada, as we know.
Right.
Just last month, we were running the numbers, and there was, locally here, I think there was something like 27 homes over $5 million were bought just last month. Yeah.
That's incredible.
There's still a home a day over $5 million being purchased right now. So there's a lot of confidence in high-end homes here. But anyway, to get back to it. Whistler is really, it's turned into, let's say, a playground for the wealthy. That's the unfortunate reality. Mm-hmm. It just is. I mean, let's think, even if you were a family of 4 and you were going to go up there for a weekend, and all 4 of you needed hotel rooms, and all 4 of you needed to buy ski tickets, you're not getting out of there for under $3,000 for a weekend.
That makes sense.
Impossible.
Sounds about right.
Yeah.
So that's something that most people cannot do, obviously. But again, let's look at the housing. And so where's it going to go? You asked what's going to happen in 2023 and beyond. A couple major things. Current inventory is 1/3 of what it was 10 years ago.
Oh my God.
When we're talking about active inventory. And that's when the average home was $500,000. So there's 1/3 of the homes available now.
Inventory crisis.
Yeah.
Right.
Inventory crisis is the whole story.
Inventory is the story across every platform, almost all of Canada, of every asset class. And then, so foreign buyer ban that comes into effect in 31 days. that has still not been finalized. So nobody knows really what's going to happen here. Whistler, again, being a municipality, it may be exempt. It may not. If it is not exempt, again, you're eliminating 9-ish% of the demand. So it might alleviate a little bit of problems for the locals who want to buy. But again, with a third of the available inventory, not really. I mean, Whistler's building at a slower rate per capita than Vancouver. So the demand is only going to increase globally, and yet the availability is only going to decrease.
Well,
you want to add something?
Yeah, I mean, this foreign buyer ban, right? It's nothing more than a political tool to get voted in again.
Right.
There's no long-term plan here. This is a stroke of a pen, right? This is, hey, we're trying to do something, but you're not. You're not doing anything, because if you look like we did, you spend an hour looking at stats. You'll figure out pretty quick that's not going to do anything.
Right.
Right? So why are we handcuffing sort of the very principles that this country was built on? It was built on immigrants.
Right.
Why are we going after them? Like my family, they were immigrants. I'm the first generation born Canadian in my family. So when I see these things, I don't agree with them. I get that if you live here, you should have maybe a greater opportunity, but you're not entitled to it, and that's something I struggle with.
So yeah, no, it's a very valid point, and I think the last thing, just to wrap on Whistler here, is Garibaldi Mountain obviously is still trying to be developed by the Aquilini family.
Right.
They come across a lot of red tape, understandably. If it happens, that's probably 10 years out, best case right now. And even so, it would act almost as an overflow.
Right.
In the sense that, Whistler would hit capacity and everyone else would go to Garibaldi.
Yeah.
You'd get a lot there, but it wouldn't ease the demand based on how much growth is still happening here and how much demand is still for Whistler. So yes, Whistler is cycling. It's on a downward trend, just like Vancouver is. It looks to have at least temporarily or close to bottoming out right now. So what's the future like? Again, simple supply and demand economics. Everything there points to further price increases for the next decade plus.
That's a great breakdown. Thanks. Maybe we can pivot to what you see as high-level risks and opportunities ahead for the residential real estate buyers and sellers. What advice do you have beyond what you've already said for first-time buyers looking to enter the market?
Buy now. I know that sounds really simple, but Vancouver is also very special. So if you want to live in Vancouver, you have to realize that you're either going to buy a home with a rate that's unfavorable, or you're going to compete for the home with a favorable rate. So do you want to spend $100,000 more than you need to acquire the home? Or do you want to pay a rate that's a little bit higher for maybe a year or two? So I think, to answer your question, I wouldn't commit to a 5-year mortgage is what I wouldn't do. I would look at buying a home right now, because as it's colloquial, maybe you've heard it before, but you marry the home and you date the rate, right?
Yeah.
So the rate's going to change. So if you find the home that you want, if you like what you're seeing and you're like, man, I was really hoping I was going to get that 25% discount that Toronto's getting, you're not. You're going to get 6 to 8%. Be grateful for that 6 to 8%.
Right.
Lock up your home, get a variable rate mortgage for the next 2 years. Then when rates start to come down and the economy starts to find its new levels, refinance at a much lower rate, and be grateful that you got in and you're not competing for a home, because so many people will get bid up unnecessarily, when if they literally pulled their socks up right now to try and make it work, they could find something. Also, your ability to negotiate, like we touched on, is now. It's not going to be in 8 months. They're going to say, that was 8 months ago.
Right.
Right?
Yeah.
And so it's like, which one do you want? Because you can't have both. Buyers have been screaming for an opportunity to buy. It's here. This is what that looks like. Outside of that, the other thing that I was going to say, which I've seen a couple, or been seeing more and more of right now, buyers are finding ways to get things done. They still are. they're getting more money from family. You got to remember, a lot of families have intergenerational wealth that's being passed down, especially from real estate. So even though home prices have come down $300,000, single family home prices come down $300,000, they're still up $200,000 from where we started. Right? So if you've got an equity position where you can help family or first-time home buyers get in, you can also look at maybe getting instead of buying a house, buy a suite duplex, live in the suite and rent out the top. Right? If you're a first-time buyer and you haven't started a family yet, you should be thinking about ways to maximize and leverage your real estate. Right? So if you can get a multi-unit, that's where you can actually make some headway. Right? But again, it really comes down to, I think, acting now as opposed to acting later. Don't act with the herd. You act with the herd, you're going to pay more.
That's great contrarian advice and very relevant for long-term thinkers. I could talk to you guys about this stuff all day, but in the interest of time for our listeners, maybe we'll wrap up. I love the way you guys integrate data and the behavioral aspects, and I really enjoy your podcast. Can you tell our listeners where can they go to learn more about your team, get in touch with you, or follow the content that you're always producing?
Yeah, appreciate that. Thank you. Yeah, we've been running a podcast for almost 3 years now.
Wow.
I know, it goes fast.
That was born out of the pandemic, by the way.
Oh, interesting.
Yeah.
So, to find everything, super simple, go to thevancouverlife.com is the easiest one, or Google that. We definitely have a YouTube channel as well. It is available on the website, or just YouTube us at the Vancouver Life Real Estate Group. And of course, if you prefer podcast as your medium, then same thing. Any of your favorite streaming devices, we're on all of them.
Awesome, guys. Thanks for making the time today.
Thank you.
Thank you, sir.